This is the MTPredictor Weekly Update for February 12th. And we'll start with the S&P E-mini here. Just a quick update tonight. Not a whole lot's happened, but we do have some movement, as we've seen in the S&P, in the earnings season. So basically, again, we had this 5-wave pattern up. We then had a move down off that wave 5 resistance area, which was our initial wave 1. Up into wave 2, went wave 3 down. Just kind of expand this a little bit. You can see the went maximum wave 3 down here. Rallied into what would be wave 4, but we did get a close above that wave 4 area, and like I told you many weeks ago, if they took out 1289.25 in the S&P E-mini here, then basically we'd be canceling our downside targets and things would be more bullish. And you can see once they took out that high here, basically the week of January 13th, then it's been pretty much off to the races into earnings season here. And if we use our decision point tool off the prior swing highs, a couple important swing highs here, it'll give us our next major resistance areas. So the first starting at 1390 in the ES, and our second, if we go off that prior wave high, that basically overlaps, but that one starts at around 1412. So again, this is bigger picture on the weekly chart here. If we just look at where we are currently, I'm just going to click last on chart using our Elliott wave tool here, and you can see the ABC pattern that has unfolded. We've taken out the minimum wave C. We're heading in towards the typical wave C, and that will start right around 1361 in the ES. So expect things to be more bullish. Now, does that mean that we can't have any corrections with what is going on overseas, with Greece and so forth? Certainly, we could see some severe corrections that could come into play as we get into some of these resistance areas for sure. And so we'll see. But basically, since this swing high is taken out, and at least into earnings season. Now, when earnings season kind of clears out, we're getting to the end of earnings season here, then we could see a sell-off once that's out of the way. So we've come a pretty good way here in the last few weeks. Let's take a look at Goldman Sachs here. And Goldman did hit that target now at 115, basically 115.50, and you can see it's kind of consolidating around there the last few days. Again, here's our $100 line in the sand, and Goldman above $100. It's bullish for the market, though we have come into resistance here. Your next major level of resistance in Goldman will be up at around 120. It's about 121.75. So we closed Friday at 115.88. So some resistance there, and we'll see how Goldman does this week in that resistance area. If we get consolidation or perhaps a pullback there. On the NQ here, we had a little wave pattern that came in on the NQ. It's a major pattern. You had up to 1, down to 2, up to 3, down to 4, came into wave 5 last week. In the NQ, also have some decision point resistance up in that area. So NQ has had quite a good rally. It's taken out all the previous highs there, and is in some new territory here, but in resistance. It's a fairly big area of resistance all the way up to 2700. But we have come into some decision point resistance here as well, so we could see some consolidation there. Once I think earnings season clears out, we'll see. Take a look at the commodities here in gold. Again, our weekly long in gold at 1632.40. You've reached the 100% initial risk line, so if you're long gold, this TS3 below the 50 period, above the 200 period. Good opportunity to be a buyer there. It's just a standard trade setup with our blue STF being the bigger trend is up. And you'll have some decision point resistance off the B swing, and that will come in around 1838, 1839, with the ultimate target on this particular trade there at 1893 and change. Again, the 100% initial risk line has been achieved, therefore you can move your stops to the entry. Pretty much the same for silver. The silver weekly long there, just shy of the 100% initial risk line, but since gold has hit its 100% initial risk line, if you wanted to move your stop to your entry there at 30.20 in silver, you could do that based on where gold is. And we'll see if we can get to that 100% initial risk line at 34.80 tomorrow or sometime this week in silver before we get a pullback to 30.20, or if we get a pullback, in case we get a pullback to 30.20, I should say. And then oil. Again, oil, this was our last long setup here in oil. Hit that target, and you can see we've come off into this wave 2 or B. It's actually going to be wave B. Support area. We've gotten a little bit of a rally, just under $100 in oil, and some things going on. And Saudi Arabia is, talking about not allowing oil to get above $100. So we'll see how that plays out. But we expected to get some type of rally in the support area there. We've gotten that. We'll see how far it goes. Watch that $100 level there in oil. And finally tonight, I will be presenting at the Traders World Online Trading Expo. That will be on Monday, February 27th at 3 p.m. Eastern Time. You can get information and register if you just come to MTPredictor.us, and it'll be posted on the site there, and you can register for that. Also, if you sign up for our mailing list, in fact, you can get the free trading course right here. Just enter your name and email, and you'll also be on the list for any presentations, web presentations that we do, and weekly market updates and so forth. So I'll be doing a couple of webinars with Adrian Tilgrade, the Traders Coach, on February 15th. That is a Wednesday, and also on the 29th of February. So if you want details on that, just sign up, get the free trading course, and you'll be on the email list to get all those updates as well. Alright, so we'll check in next week and see how the market has progressed. Until then, have a great trading week.